SoFi routinely issues more than $1 billion in personal loans every single year. That's obviously big business. I'm going to explain the key things you need to know about their loans, their application process, their loan terms, rates, and fees, and issues around repaying and managing the loan. SoFi's personal loans are unsecured loans. That means that they don't accept collateral on their loans. On the one hand, this is good because it means that you can't lose your collateral if you have trouble repaying the loan. On the other hand, secured loans often have lower interest rates. Applying for a SoFi personal loan will not affect your credit. When you apply, they will use a soft credit pull to assess your eligibility. If you decide to move forward with the loan, they will do a hard credit inquiry. This can adversely affect your credit score in the short term. SoFi personal loans are versatile. Once you receive the money, you can use the proceeds for just about anything. Common uses include debt consolidation, home improvement projects, medical expenses, weddings, or other large purchases. SoFi explicitly prohibits the use of their loans for real estate, business purposes, post-secondary education, or gambling. One of the most common questions about SoFi personal loans involves who qualifies for one of their loans. You can't even apply unless you're 18 years old or older, a US citizen or a permanent resident or visa holder, and you reside in the United States. Qualifying for the loan will depend on your financial history, employment, your credit score, your debt-to-income ratio, your income, and the amount of money you need. If you are self-employed, they may request tax documents or bank statements as a way of verifying your income. When looking at your financial history, SoFi is most likely to look closely at your payment history and the history you have with different types of credit. Because they look at your entire financial profile, they are unlikely to base their decision on your credit score alone. However, your credit score is a decent proxy for your ability to handle new credit. SoFi likely only lends to people with good credit scores, typically 670 or above. If you are looking for a higher loan amounts or lower rates, you are likely going to need a score above 720. SoFi may request the following types of documents: driver's license or passport as proof of identity, lease documents or utility bill as proof of current address, W-2s, pay stubs, tax documents, or bank statements to show employment and stability of income. Common reasons SoFi denies people for personal loans include high debt-to-income ratio, insufficient income, inconsistent income, or problems with your recent credit history, like having late payments reported to the credit bureaus. If you need to strengthen your application, SoFi will allow you to include a co-borrower on your application. Of course, a co-borrower will only help your application if they are in a stronger financial situation than you are. The other advantage to using a co-borrower is that it could help you secure a lower interest rate. The most common co-borrower is a spouse or significant other, particularly because SoFi requires that your co-borrower live at your same address. You can complete the entire application online, and it should not take more than a few minutes, especially if you have the information that they're looking for handy. You could be approved within minutes of submitting the application. If they need additional information from you, the process could take a few days. If you select you want to get your money through bank transfer, you will most likely receive your money within 24 hours of signing your loan agreement. In fact, if you accept the loan before 6 p.m. Eastern Time, you could see the money in your account on the same business day. SoFi's loan amounts generally range between $5,000 and $100,000. Their average loan amount is around $35,000. The APRs on a SoFi personal loan range from a minimum of 8.99% to a maximum of 35.99%. That is a pretty big range and reflects the fact that what they offer you will depend on your credit situation, your income, and the term length you select. Only the top 10% of their applicants will be offered their lowest rate. SoFi often advertises that they do not have an origination fee, but that isn't completely true. What they will do is give you several offers, which will likely include one without an origination fee. Their loans can have an origination fee anywhere from 0 to 7%. The origination fee will be included in your APR. If you select a loan with an origination fee, that fee will be deducted from any loan proceeds you receive. If the origination fee is included in the APR, why would you select a loan without an origination fee? You will want to select a loan without an origination fee if the APR is the same and you plan on paying the loan off early. You'll save a lot more money by having no origination fee if you're paying that loan off early. SoFi boasts about having very few fees. They don't charge a dishonored payment fee if you don't have enough money in your account when they attempt to withdraw your payment. They also don't charge a late fee. There are some other lenders that don't charge late fees, but it is fairly unusual. SoFi's personal loan terms usually range from 2 to 7 years. Selecting a longer loan term can lower your monthly payment, but it will mean paying more in interest over time. It's always best to select the shortest term you can reasonably afford. SoFi has an online account portal where you can manage your loan, payments, and communication preferences. Before you accept your loan terms, SoFi will give you an amortization schedule. This will lay out your payments, including when they are due and how much of the payments will go towards interest. If you make an extra payment, SoFi will allocate the payment in the following way. First, they will pay any outstanding fees or interest. The remainder of the extra payment will be applied directly to your principal balance. The key to getting the best loan you can in your situation is to shop around. Every lender has a different algorithm for deciding who to approve, how much to offer, and at what rate. We recommend getting 2 to 3 approved offers in hand before you accept a loan. At the Yukon project, we've tried to make shopping around easy. If you go to our lending marketplace page, you can select the purpose for your loan, how much you need, and what your credit score range is. When you apply to any one of our featured lenders, including SoFi, we will check your rate with up to 40 other lenders behind the scenes. Our partners use a soft credit check, so applying won't hurt your credit score. We will show you all of your approved offers so you can pick the loan that's best for you. If you have any other questions about SoFi's personal loans, leave a comment below and we'll try to get them answered for you. If you found this information helpful, please like this video and subscribe to our channel. Doing so helps inform the YouTube algorithm that this is useful content, and it will help others find it. We appreciate your support. Thanks for watching.